Welcome to the CFO channel. My name is Ali and I simplify accounting and finance concepts for founders and investors. As a CFO and advisor to a lot of small businesses and startups, one of the things that I see a lot of founders struggle with is cash flow. What do I mean by this? A lot of small businesses just don't have the cash they need in their bank account to pay their bills when they come due. Or number two, they don't have enough cash in their bank account in case of an emergency. The classic example of this is a service business. Let's say you are the owner of a law firm. January 1st comes around and rent is due on January 1st. Your subscription payments are due on January 1st. Payroll, if you have employees at your firm, is typically due on January 15th on a bi-weekly basis. And let's say that your clients pay you on January 30th. You can clearly see what the problem is here. There is a mismatch between when your clients pay you and when you have to spend money to cover your expenses in the business. If your clients aren't paying you until the end of the month and your expenses are incurred at the beginning of the month, you will need to find the cash to cover these expenses until you can wait for your clients to pay you. A lot of this cash has to come from your own pocket, and it can be substantial. At its core, the problem is quite simple. It's a cash flow timing problem. You have expenses that are incurred at the beginning of the month, and then you have client payments which will come at the end of the month. There is a gap between the time you have to pay for these expenses and the time that you will get money in your business. This gap needs to be funded through cash flow that will be coming out of your pocket or through a bank. God forbid, if in a certain month you actually have some sort of an emergency, like let's say you have to replace the roof at your office, you have to get new computers, you have to make a hiring decision, a lot of these expenses, again, will have to be covered by your own personal funds. Now, some of the most common businesses that encounter cash flow issues tend to be service-based businesses and inventory-based businesses. Let's look at service-based businesses first. Service-based businesses always encounter cash flow issues because they bill their clients for services provided today out in the future. That means they're doing the work today, paying their employees today, but clients are paying them in the future. This could be 30 days from today, 60 days, and sometimes even 90 days in the future. Now, the second type of business that usually encounters cash flow issues is an inventory type of business. These are businesses like e-commerce stores, DTC type stores, and any type of retailer that relies on inventory. The classic example here is you're selling your product to your customers and they're taking a few days to pay you because you've allowed them to pay through credit or through installment payments. Now, if you have an urgent need to buy inventory because you're running out of goods to sell to your customers, however, they aren't paying you because they purchased the goods on credit, well, you'll have to come up with the cash flow to buy this new inventory out of your own personal pocket, or you will be required to go to a bank to get a credit line to fund the inventory purchase, and neither situation is ideal. And now let's look at 5 tips on how you can improve cash flow in your business. Number 1, ask for a deposit. If you are the owner of a service-based firm, like let's say a law firm or a design firm, and you're going to be doing work for your customer that will take 30 days or sometimes 60 days, instead of billing them right at the end when the work is complete, at the end of the 30 days or at the end of the 60 days, ask them to put a deposit down so you can use that cash to cover any type of expenses that you incur as you get the work started. This will do a ton to help with cash flow. Number 2, send your invoices quickly. I see a lot of businesses that make a sale to a customer and then bill their customer sometimes days, weeks, or months later. Don't do this. This is one of the easiest things that you can do to improve cash flow. If you're struggling to bill your clients on time, consider outsourcing your accounts receivable to an accounting firm like a vertical CPA. Shameless plug. And more importantly, consider automating this process by using software like Square or a cloud bookkeeping software like QuickBooks Online or Xero, which allow you to bill your clients seamlessly. Number 3, bill your clients frequently. If you're the type of a firm that provides services to your clients that require a long duration, let's say you're a design firm and you're working on some sort of a design for your client that will take 3 months, consider billing your client a bit more frequently. How do you do this? Well, instead of billing your clients at the end of the 3-month project, what you can tell your client is that you will bill them at the end of each month, let's say on the 30th. Basically, what you're telling your clients is that you're going to be billing them throughout the project as opposed to at the end. Another way to do this is to set milestones. A lot of construction companies, for example, when they're building a particular house or a building, they end up building a lot of the developers based on milestones. So let's say the basement is done, therefore they can bill for that. The entire structure is done, so they can bill for that. Number 4, make it easy for your customers to pay you. This is such an easy one to implement, but if your customers want to pay you by credit card or they want to pay you online, set this up in your business. Don't force your customers to pay using methods that require time and effort. Human beings by nature are lazy. And the harder you make it for your customers to pay you, the longer it will take for you to get your cash. Use digital payments like Square and Stripe to make it easy for customers to give you their money. Better yet, if you can systemize this whole thing by setting up something like a pre-authorized debit, such that you bill your clients on the first of the month or on a particular date each month, you're guaranteed to get your cash right on time and your customer won't have to do anything to pay you. And number 5, use a credit line. If the 4 steps I outlined in this video don't help you improve your cash flow, then your best bet might be for you to get a credit line to cover the timing gap between when you need to pay for your expenses and cash is going out of your business and waiting for that cash to come into your business when your customers pay you. In order to cover those expenses, what you can do is get a credit line from a bank. A credit line is a flexible loan. Let's say you get approved for a $10,000 credit line. That means that you can borrow up to $10,000. Any amount that you borrow, you will have to pay interest on. So let's say you run a service type business and you have expenses on the 1st of the month and your clients pay you on the 30th of the month. What you can do is take the money from your customers and then repay the credit line plus the interest you owe. Okay, so I hope this video helped you understand on how you can improve cash flow in your business. If you're interested in learning more about cash flow, check out my previous video here where I go over the differences between cash flow and profit.